Let's get you updated on our grain trade today. I'm Marlon Bowling with you, your tour guide to the ag commodities. Things are starting to get a little lively here on the grain trade. Started out under quite a bit of incredible pressure in some contracts, and now things are starting to bounce a little bit. Let's take a look at what's going on now with our quotes provided by Bar Chart. Well, who saw this one coming? After a weaker start today, September corn is now up about 8 cents. Now it's up 7 3/4. We're at 6.22 3/4, and December corn now 6.5 higher. We're at 6.18 1/2. Okay, on soybeans. We had been trading higher and lower and back and forth, several times this morning, and September soybeans are 12 3/4 higher now at 14.88. This all happened in about the last, I'd say 20 minutes or so of trade. November soybeans now up by 7 cents at 13.97, almost on the high of the day. And we're within a stone's throw of getting back up to $14 all of a sudden. Now, on the wheat trade in Chicago, they had some very steep losses early on today. September got as low as 7.25 3/4. Now we have bounced to 7.38 1/2. That's a 13-cent bounce. However, we're still down 24 3/4 cents on that September Chicago wheat. Kansas City, we have September down 31 1/2 cents. We're at 8.19 1/2 right now, but it has bounced 12 cents from its low about a half an hour ago. And now in the spring wheat trade, you have September 29 lower at 8.54 1/2. So some big moves going on there. Can the cotton market rebound? Well, not yet. December down 121 points at 112.33. Well, we're fortunate enough to be joined by Ted Seifried of Zaner Ag Hedge. He's based in Chicago. And a little bit of a jumpy market here, Ted, as we go through a Thursday and get closer to the midday session. Something happened here about a half hour ago. I don't know what it was, or did the selling just dry up? What do you think here?
Yeah, I haven't seen any new news flash in the last 20 or 30 minutes or so, Marlon. But, if you think about it, export sales were really pretty good, especially for new crop soybeans. I mean, new crop corn was good too, but new crop soybeans, 1.3 plus million metric tons. I think trade guess was about 600,000. So you have that. You had a market that was lower here to start the day, but we really couldn't pressure it. We couldn't get through the lows. We just kind of hung out down there. And you've got a risk on day going on across the board with crude oil up $2 plus. So that buying has now come back into the market. We held support right on that trend line, sort of where we needed to. So it's been a bit of a balance. We still have a bit of a ghost of a weather market with the really warm temperatures expected for Sunday, Monday, into Tuesday for the plains, as we just saw. So, there's still some concerns out there weather-wise, even though we do have a better forecast this week than what we were looking at the end of the day last Friday. So, just for the moment, we are holding and we're attempting to have a bit of a balance. Now, that $14 level is going to be a big, interesting level for the soybeans. Can we get up and stay up over it? Or is that going to be, sort of this dead cat bounce to where we check that out and then come back and test the lows again? I'm not exactly sure, but I'll say this, crop tour starting next week. I've been on 7 times, and I can't remember a year where we've been sharply higher on a crop tour week. Usually it goes the other way. So I really don't know. It's been a fairly impressive bounce here today, and a lot of it is demand driven. And really, our focus is going to turn more and more so to demand. So can we continue to see these export sales, these good weeks? Can we string a few of them together and get excited about that? Or do we continue to be disappointed and this was just a one-off week?
All right. Well, Ted, we'll come back in a moment. We'll talk about the livestock trade here on a Thursday right after this. And just to drive home that point, just since Ted and I were talking just a couple of moments ago about the soybean trade, look at what it's doing right now, Ted. Let's bring those soybean prices back up here. The rally continues. Wow, September soybeans now at $14.91 are up 15 3/4 cents, now 15 higher. So big time rally here, and it's a sharp upward move here on the intraday chart. Just wanted to point that out. Live cattle trade. At the moment, we have October now 52 cents lower at 145.32. December is down 40 cents. On the feeder cattle market today, with the corn market turning around, well, we're starting to feel the pressure on the feeders. We have the September dropping by $1.30. We're at 185.82. October down $1.40 right now. We actually had a high of 189.80 there. Lean hogs, you have the October down 237 at 95.67. December, $1.50 lower at 86.92. Ted, have the hogs run out of gas?
Yeah, we had the big reversal lower day 2 days ago. We tried to have a recovery yesterday, and now we're under pressure once again. So you don't love what you're seeing in hogs today. We didn't have great export sales. That's certainly not helping the cause here at the moment. So we're on alert on the chart. Are we going to see follow through from that reversal lower day that we saw on Tuesday? And today it's kind of feeling like we might. Now, ultimately, I think that might be a bit of a correction in an overall still bullish market. I think there's a lot of speculative reasons why speculators are interested in hogs. If we are going to slip into a bit of a recession going into the fall and winter months, pork might be the darling of the American consumer. But in the meantime, yeah, the poor exports are not boding well today and are not really kind of helping us erase that sell signal that we got on the chart on Tuesday. As far as the feeder.
I was just going to say, it looks like they're kind of testing the 100-day moving average on the hogs. But on the cattle, the charts have been looking a little different. I think you were going to talk about the feeders. They have had quite a run here for a while.
Yeah, quite a run. Not terribly surprising that with the reversal higher in corn, that feeders have reversed lower on the day. I mean, that's certainly what we would expect. But overall, that is a rather good-looking chart. We have had a bit of a run. We have gotten a little overbought. So we could see a bit of a correction. But overall, it still looks like an upward trending market. Cattle have cooled off a little bit. Beef exports were also nothing really to write home about. But, if we're going to have a bit of a recovery in the stock market and things like that, we'll get more optimistic about domestic demand. Box beef prices have been a bit of a thorn in the side. We want to see cash prices trade higher, but we know we're putting a little bit of pressure on Packers margins. Still good, but putting a little pressure on Packers margins. So we have to be a little bit cautious of our expectations for cash going higher in the short to midterm. But either way, it's nice to see that we're holding this upward trending channel here for the moment. And going back to that strength in soybeans real quick, I'm going to guess that there's going to be people rumoring China buying or somebody in there buying cash beans here today for export. But this is the time of year where we would expect to see that. So that would not be surprising if that were actually the case.
Could be. All right. Thanks for pointing that out. We'll be watching for it. I appreciate it. Ted Seifried of Zaner Ag Hedge in Chicago. Janet, back to you.